So I'm back with another look at trend mystery again, and this time I want to cover a few testimonials that came through. Karl sent out, and we'll just quickly take a peek at some of them. We've got this one here. My name is Arthur. I acquired it 2 days ago. I've seen great results, 6%, 3 operations without losses. I want you to keep in mind that you're going to take losses, right? Regardless of what these last 6 trades are. This person has taken, the last 3 trades. You're going to take losses, okay? And one key thing he says here is on strong trends. We certainly want to make sure we're in a trending market with strategies such as this. And when there are at least one trend mystery confirmation, and we went over that in a couple of videos, that you certainly don't want to take when the setup first shows up. You want to make sure that we do have a confirmation that we are getting some momentum in our direction, and that's all on the indicator. And 20 period moving average for the trend. Yep, I spoke about that as well, looking at a moving average. Depends on your outlook. If you are going to be a longer term trader, you certainly want to use a higher moving average than 20, but 20 is, we'll take a look at that. And larger time frames as more of an entry confirm. I haven't done any work on that with trend mystery yet, and I'll take a look at it because you certainly can trade in the direction of the higher time frame. That's one thing I prefer doing. Since I trade daily charts, I like to look at weekly charts. Last night was my first night. I must say I never felt a sense of relief. I hope he said he was using it in a demo account because this just came out. So if he's selling, he spent last night selling the GBP pairs and the gold from, I don't know what he's done here. Hopefully Jason has used a demo account. I recently bought Trend Mystery, 2 trades, both were winning trades. Seems to be born to win. Well, you don't know that, right? You don't know until you get a heck of a lot more than 2 trades in your basket there. That's my phone going off here. This one here, Trend Mystery Indicator, continued support. Yeah, you certainly can hook up with Karl, and if you have any questions about it when you're going through it. 6 trades on my platform using a demo account. Okay, good. All trades have been profitable. Good for them. I guess that's 100% in the money, which is great news. Doesn't say what is profitable for them. We don't know. It could be 3 pips. We don't know. So it could be just how they're managing the trade as well. So, these are I take these things with a grain of salt, but just by looking at some of the stuff that's been said, that's the stuff that we've talked about in our video. So what we're going to do is we're going to just take a look at one currency pair, the Euro US dollar. I'm going to look at the daily chart. And you can see here that it's in a sell signal. It's been there for quite a while, and we certainly did do well on this trade. If we look and take them through here, got a little bit of heat going against you, but it did eventually fall for 250 pips. Here's the thing. Let's talk about things. So the 20 period moving average, you can use it different ways. You can either use the slope of the moving average. As you can see, it starts to slope up, and that's a long for you. Sloping down is a trade in the opposite direction. You can use where price is in relation to the 20 period moving average. I want you to know straight up that a moving average does not have any magical properties. Okay, it's just price smoothed out, an average of the last X amount of days. One good thing that you can use a moving average for is you can see here as price is whipping back and forth around the 20 period moving average, you'd want to stay out. And one thing I just noticed is you can see that when price is whipping back and forth over the 20 period moving average, these signals are just a setup. You don't have your confirmations, right? There is no confirmation 1 or confirmation 2. That's pretty good. We do get it over here when price starts to break away from the 20 period moving average. So again, there's no magical number. There's nothing magical at moving averages, but they can help you see markets like this. Okay, so keep that in mind as well. And does it work on the shorter time frames? Well, let's just take a quick look at that. Now, just so we're not, jumping around and cherry picking things here, I stick with the Euro US dollar. And as you know from one of my other videos, I'm not a big fan of trading the Euro US dollar. It's one of the most used and abused currency pairs out there. So let's just take a look what's happening. Let's just walk through this chart. Okay. Now remember, I'm in Eastern time. Okay. So even though we're looking at, according to my chart, it's like 20:45 here, right? It's actually 1:45 p.m. All right, so we're a little bit 7 hours off. So just keep that in mind. Now, here's what happens. This is obviously something happened here, new spike perhaps. And this is probably, well, this is 1900 hours, right? So that's 7 o'clock. So this is around noon my time. You wouldn't have gotten in this trade. It would have been very difficult. And this is actually a good thing, a good lesson. If you see a strong spike like this, you certainly don't want to be jumping on board a trade, regardless of whatever strategy you're using. You often get these little minor retraces, okay? You can actually, when this does happen, you can see their moving average is in our favor. As long as we're still printing out here and you maybe get the first green candle, you can take that trade as well. It goes up for about 34 pips before we pull back. And in here it gets pretty sloppy. We did a down trade here, a down move. We only have the second confirmation. And I talked about my other videos that you probably want to wait, around the third. You're going to have to test that for yourself. Okay, keep that in mind. Here we get this price slopping back and forth, the 20 period moving average. So again, I am not a fan of the Euro US dollar. I don't trade it. And so let's take a look at a currency pair that I would actually trade. Okay, now this is the pound Aussie. And I know people say, well, you got to trade the majors. They're the most liquid pairs. Come on, let's be honest. It doesn't matter what you trade. You're going to get filled on your order. All right, it's that simple. It's such a huge market, huge, that you're going to get filled. So don't be too worried about that. You will get slipped depending on when you're trading, but overall, don't listen to that crap. And you can see that this pair moves nice, and you do get some nice fall. Like this is a swing down. It's 167 pips on a 15-minute chart. You would not get into this trade until this area right here, and you can see it just drops, right? Here, again, price is above. We've got a flat moving average. Perhaps you wait until both of these are in the same direction. You see you're starting to curve up here. And take that trade, and this trade went up for 36 pips. So like I said, pound Aussie is one of my favorite pairs to trade. Let's take a look at a daily chart. Oh, well, here you go. Let's say you shorted. Well, would you short here? We just talked about that, right? Remember that last testimonial, one of the testimonials, they talked about price action and higher time frames and just reading the market. So that's what you're trying to do here. Whether you take this trade or not, but it's up to you. You see we get a big thrusting move down. It's very difficult to take trades off of thrusting moves like this because you do get pullbacks, all right? Forex likes to mean revert as well. So just because you're getting strong momentum in your favor, expect that we are going to see some sort of pullback in price. And you can get through here all the time. You can get through on the first confirmation. If you just read price action, because big strong move down, right, showing intent to the downside, we get a rally up here. Price doesn't go anywhere to the upside here, right? You can see it's weak to the upside. So this is a trade that you would take, period. This is like a 500 pip trade if you just go to the last swing and you get out. And remember one of the other videos I talked about, I think I did anyways. When you get a big strong momentum candle in your favor, like we just saw right here, that's a gift. That's the biggest candle we've seen. Overall, you take that and you get out and you bank that profit. And if you did that, say you got out here, you rode this back a little bit, now that's a big stop loss, right? But remember, we use ATR for our stops. I do anyways. And the ATR at that point in time roughly is the ATR is 164 pips. You don't take one ATR, you take 1.5 times ATR, 2 times ATR. And yeah, I know some of you guys are saying, well, it's gonna be a small position size. It doesn't matter. You have to trade within the parameters the market's giving you. It's that simple. If you don't, you're just I don't know how you're deciding where your stop goes. And I know you people say, well, just about the swing levels. You don't know if your swings are any better than random, right? And you go back when we all started trading, one thing we hear is, if you're going to go short here, let's put our stop in this area right here. Well, a lot of people do just that. And what usually happens for a downtrend, for example, price will spike up, take you out, and you're getting out of the trade when a lot of traders are just piling back in the trade, right? So that's one of those general rules of thumb that doesn't pan out in the real world. We can look over here. You see we got a nice sloping up and easy trades, right? You can see here. This is brilliant. So if I took it off the second one after this big thrust up, this goes up to peak 823. Of course, you're not going to get the highest high on here, but it's just an indication of what you can get. This trade falls in line, and you get out here roughly, 377 pips. This is all slop, so be careful with that. Remember, whipping back and forth. Once they start hugging the trend line, what does that tell you? Well, you know how moving averages calculate price, right? It's the average of, well, this is 20 periods, so the last 20 periods. So when price starts ranging like this, market comes up. And this is when people go, moving averages are support and resistance. No, they're not. It just catches up to price because price is just ranging back and forth, right? So keep that in mind as well. Again, a lot of myths out there that people get suckered into. If you took this down trade for whatever reason, it doesn't get triggered in. Why? Because we don't have any confirmation whatsoever. This trade here, you take off at this high as we broke over top of this levels here and this level here. And that rides up for, what's this, 440 pips. Let's move on. Again, I'm not cherry picking anything, right? Same pound Aussie 30-minute chart. Let's see what we got here. We got some sloppy price action here, small ranging candles here, right? Lack of interest. We get a big spike down. Again, we get some lazy price action here. This is a 30-minute chart, sorry. I didn't know if I said 15. I never traded 30-minute charts, to be quite honest with you. You see how the moving average is kind of hooks here, right? It's just, like I said before, it's just a calculation of price. So you'd still probably be considering a short trade on here. And then that trade would get in here because we're going for at least one confirmation. Yeah, you're looking here at the close of that candle. And this trade falls for 117 pips. And if you got out here, well, let's just go at this. Let's just, you know what? Let's split it right here. 46 pips. All right, we'll just split the difference. So, and if I go up to a 4-hour chart, again, we're going to get a move up. We don't get a trade. This is a trade signal, but we're looking for confirmation. I said that in my other videos. Get confirmation. A down move, there's no confirmation. A move up. Well, you could take this trade, and there's no reason why you wouldn't, and it would be a losing trade right here. No reason why you wouldn't do that trade. And then we get this down move here, and, well, that comes back to 145 pips. So, again, it is what it is. It's not too bad. And you're going to have to decide about your stop. So what I'm going to say about that, if I'm in this trade here and price is doing this and it's still here and my ATR stop is, let's say it's down here, okay, right around this area right here, and I get this happening here. Now, remember, I'm not in a trade, all right? You may want to wait on profits. It's up to you, but I want to cut my losses as quick as possible, right? I want to let my profits run, cut my losses. So when this candle closes here, I'd want to just exit that trade. And I'm going to get a loss of about 127 pips. Remember, this is a 4-hour chart, and this pair can move, right? It's got nice range. You're looking at an average range over the last 14 days, 14 periods, sorry, about 63 pips on a 4-hour chart. Doesn't seem like a whole lot, but I think that's what that says down there. Let's take a look over here. Yeah, 67 pips. So you can see it ranges. And if you go back to the daily chart, we're looking at ranges of 184, 185, roughly. All right, give or take, 170s. So you can see it moves. And you compare that to the Euro US dollar, which has like 80 pips. Where am I going to put my money? So it's pretty obvious. Another pair I like to trade is the pound CAD. And you can see I'm staying away from US dollar crosses. No matter what you trade, Euro US dollar, pound US dollar, understand you're trading the US dollar. All right. So you can see how the market moves in the pound CAD. Now, lately it's been ranging, as you can see over here, and that's very, very tough to trade. Can you trade it? Certainly. And usually when you see, I'm going to say usually with a grain of salt, but when you get ranges, if you go down to lower time frames, these are actually nice trending moves on lower time frames. All right, so you're not, if you just limit yourself to a few currency pairs, you can still trade them. Okay, let's take a look. You see it's whipping around here. For example, it's not pretty. This is 479 pips on the 4-hour chart. And would you take that trade? Absolutely. Look at this trade. Boom. It's nice. Would you take this trade? Yeah, you would take this still. You would still take this trade, and it does turn into a loss depending on where your stop loss is. Just be careful. I don't know if this gap down is from my feed or it was an actual gap down. If it's a gap down out of a range like this, you would not take this trade, right? That's just normal price action. So you can see here, there is a trade there on the first confirmation. No confirmation for a long trade here. Short, well, this just drops, right? But remember, we talked about spiky, big momentum bars like this. This candlestick here is a 335 pip range. So you definitely can expect some sort of price action like this when you get these moves. Sloppy here, easy trading right through here. Price breaks above it, get the momentum. Let's say you didn't take that trade, get a nice base at the top of a momentum candle. That's an easy trade to take. That's 454 pips, and you can see we're in our first confirmation. Let's say you want to day trade it. Again, no, I don't day trade, but this is weird. I don't know if this is a short setup. I don't know what happened there. But you can see we're printing up in here. Again, our angle is up. You would take this trade set up here, a bit of a pullback here. And this goes up for, wow, quite a bit, right? Not bad. So don't just look at US dollar cross. Here's another currency pair, the pound against the Swiss franc. And just let's take a quick look here. You can see we got nice sloping move, moving averages down. We get this trade right here on the first confirmation. Now, this is only using a 20 period. Okay, keep that in mind. You know, we dropped down here for 393 pips. If you were to take this up trade for whatever reason, you ignored this moving average, you still would not get that trade because it doesn't have any confirmation. Right now, we're in a sell, and we wouldn't take this one. Well, we would take this one, sorry. If you're going for first confirmation, you would take this trade. If you're waiting for the second confirmation down here, you would not take this trade. You could, depend on, make up your own trading rule of what you're going to do when you get this. What do you do with the first one? What do you do with the second one? Sorry. What do you get when there's no confirmation, first confirmation, second confirmation, right? What do you do? Do you trade differently? You're going to have to figure that one out for yourself. So pound Swiss is another pair that I don't mind trading too much, and you can see that there's nice price action here. And things are going to change if we just change this to a 50. Things are going to look a little bit different as they would over here, depending on how you're trading this, right? Depends how you trade it. If I was going to use a moving average, I would look more at a 50 period. Again, nothing magical about it. The thing is that it does allow price to pull back against you a little bit further without making you jump into a trade, because we're taking advantage of this, the confirmations, right? This doesn't get a confirmation to the upside. You wouldn't take that trade, and it's below our moving average, right? This one here, price is above it. We have our confirmation. You would take this trade. This trade here is breaking below, and right here would be the trade for you. All right, so you're going to have to experiment with that and put it in your trading plan. And I have one more currency pair that I would like. Now, this is a slow mover, the euro against the pound. But still, it's because it's smooth, I'm a fan of that. So, there's the time frames you can trade this on. It just moves nice and smooth, right? Generally. Remember, we are in December now, so things are going to change a little bit. Well, that whole thing looks pretty ugly, to be quite honest with you. And then we're going back and forth over top this moving average on the daily chart. Drop down to a 4-hour chart. Well, things look a little bit different. All right, this is I still have the 50 on. So let's go back to our 20. So we're comparing apples to apples here. Still, you can see how sloppy it is. So this would be, we had one really good up in 2017, slop, a little bit of a nice move here. Beginning part of this year, the first half of the year, nice little move down here, and then you get this kind of stuff, whips down, whips back up. That's where you'd want to say, okay, you know what, let's just bail on this for a little while. Momentum to the downside, momentum to the upside. That's very tough to trade. Anyways, that's just some ideas that you can look around when you download Trend Mystery. Take a look, look over it as a trader. Don't look over it as a system buyer. All right. Understand what you're looking at, understand trend. And you know what? You can't go wrong. It's giving you what you need. It's giving you your entries. I covered in the PDF. It does have its own stops and targets. For me, I use ATR. I consider that to be the smartest way to do it, simply because it's using the volatility of the market. Anyways, any questions about it, let me know. Click above, click below, download it. I think you'd be pretty happy with it. And again, I've gotten some great comments personally. So if you keep those up, I'll keep the videos coming. And hey, let's make some money. Talk soon.